Kevin, welcome. Good to have you back with us. What's an investor to do right now?
Well, at Washington Crossing, we've upped the quality of the holdings in our equity portfolios over the last year or so. Tactically, in terms of asset allocation, we've brought down our exposure to stocks versus bonds over the last 9 months. But as we sit here today, I think it's important to have some perspective. So we published on our website at WashingtonCrossingAdvisors.com a piece that goes through all of the past crises, geopolitical crises and otherwise, since World War II. And the answer that we got was a little bit surprising. When you think about all the things that have happened over the years, what you find is that 12 months later, the stock market is usually up almost an average of 10% or so. And that's 80% of the time. So it's not to say that the market can't go down here, but it's important to step back and really focus more on the bigger picture. And for us, it's always going to be about quality and being more flexible in the portfolio.
So let me understand what you just said. If you look back at geopolitical crises, whether it was the Cuban Missile Crisis or the invasion of Czechoslovakia in 1968 or oil shock in the 70s, a year later, you say 12 months later, the market was up 8 out of 10 times for an average of 10%.
Yes, and it's counterintuitive, obviously, because especially today as we're being bombarded with all of this uncertainty and negative information. But that's the record of history. And the market has found a way during most of these times to assimilate new and sometimes scary information, but then find a way through it. So one of the great things about markets is that they can be flexible and they can respond. So, for example, we see some good things. We see that earnings for U.S. companies, which are ultimately most important, are hitting new highs now. They're not cratering the expectation. Number two, when we look at the week-to-week strength of the U.S. economy, from the Federal Reserve puts out data every week on the strength of the real economy. That's holding up very well. And when we look at the stock market, yes, it's down a little bit, as it should be, but it's not down significantly. So there's still some sign that investors are holding in there.
Shepard Smith here. Thanks for watching CNBC on YouTube.